Hey, it's Linus here. Welcome back to the Market Wizards playlist. In today's video, we'll be taking a look at the Market Wizards lesson from Gary Bielfeldt. Who is Gary Bielfeldt? Gary Bielfeldt is one of the major players in the futures markets and he started with just $1,000. While we don't know the exact numbers for Gary Bielfeldt, to be one of the major players in the futures markets, one has to have a couple of billions of dollars. And this is all the more amazing considering that Gary Bielfeldt started with just $1,000. And that is why in today's video, I'll be sharing with you the Market Wizards lessons from Gary Bielfeldt. And these are the 5 lessons from him. The first is diversification. The second is when to take profits and losses. The third is trend following system. The fourth, emotions and trading. And the fifth is advice for beginning traders. The first Market Wizards lessons from Gary Bielfeldt is diversification. Or rather, don't diversify. Gary Bielfeldt doesn't believe in diversification. He believes that we should pick one area and become an expert at it. So for Gary Bielfeldt, one of the areas that he focuses on is the futures markets. And this can be applied to us. I think many investors and traders in the stock market have this shiny object syndrome. They will move from one area or one market to another without fully mastering the first one. For example, they might be investing and trading in stocks. But before they fully master the stock market, they move into another market, say the options market. If they can't even master the stock market, such as knowing what stocks to buy, and when to sell these stocks, it is not wise for them to move on into another market such as the options market. Because at the end of the day, to succeed in the options market, a lot of the things in the options market rely on the fundamentals of the stock market. And that is why Gary Bielfeldt believes that we should pick one area and become an expert at it before moving on to other areas. So that's the first Market Wizard lessons from Gary Bielfeldt. The second Market Wizards lesson is when to take profits and losses. Gary Bielfeldt is not the first Market Wizards that mentions this. In fact, if you have been watching the videos in my Market Wizards playlist, you'll notice that many Market Wizards also share this same advice. Stay with your winners and get rid of your losers. Gary Bielfeldt's ability to stay with a major position for a long-term move allowed him to leverage his well-timed trade to a much greater degree than would have been achieved by most professional traders with the same initial position. What this means is that for many traders in the stock market, they don't tend to let their winners run, so they take profits very fast. And sure, they might make some profits, but in the end, they are missing out on a bigger move. And this is where Gary Bielfeldt has an edge over other traders. He tends to stay with his positions and ride out the larger trend, which has allowed him to generate greater returns than the average traders in the stock market. Okay, so this is an graphical illustration of an uptrend. Let's say this was a point that Gary Bielfeldt and say trader A entered at. After they got into their position, the market moves up. But after it moves up, the market retraces a bit. And this is normal in an uptrend because in an uptrend, prices do not move up in a straight line. Prices tend to follow a wave-like motion. What happened to Trader A and Gary Bielfeldt when prices move down? Trader A might move up his stop loss as prices move up. And say he set his stop loss around here. As prices reach the peak over here, prices decline and then it reaches this level where Trader A got stop out. So Trader A will make these profits over this level over here. But for Gary Bielfeldt, he's staying on with the longer trend. So even though prices have retraced a bit, he still believes in the long-term trend of his position. And as we see later on, as prices retrace, prices managed to recover and move up. And again, it faced some retracement over here, and then it recovered, faced some retracement over here, and recovered. And say at this point over here, Gary Bielfeldt believed that the long-term trend is about to change. And he decides to exit his position over at this point over here. So if we were to compare the profits made by Trader A versus the profits made by Gary Bielfeldt, can you see that even though both of them entered at the same position, the profits that Gary Bielfeldt made versus the profits made by the trader is vastly different. And this is because of Gary Bielfeldt's ability to stay with the longer trend. So how do you stay with your winning trades? These are the 3 steps shared by Gary Bielfeldt. The first is that he believes that we should develop a thorough plan and strategy for all the different potential outcomes. If the market rises up, we need to have a plan and strategy for it. If the market retraces and declines a bit, we also need to have a plan and strategy for it. Only by having a thorough plan and strategy for all the different potential outcomes are we better able to know when to take profits and losses. So that's the first step. The second step is a long-term objective by doing your homework. For this point, Gary Bielfeldt is talking about doing your fundamental analysis, which we'll talk about later on. But for now, you just need to know that Gary Bielfeldt does his homework, which is fundamental analysis of the markets. And from his fundamental analysis, he is able to determine the long-term trend of the market. And because he has a better idea of the long-term trends of the market, he is also better able to know when to take profits and losses. The third is having stop losses and a trend following system on when to get out. Stop losses are orders which will automatically get you out of your positions if the market goes against you. And the trend following system will be better able to help us determine what the trend of the market is. So if our trend following system indicates to us that the trend of the market is shifting from uptrend to a downtrend, then this can be a time for us to take our profits. So these are the 3 steps on how to stay with your winning trades. The next Market Wizards lessons from Gary Bielfeldt is trend following system. He mentions that the best thing when starting out is to learn how a trend system works, because a trend system will teach us the principle of letting our profits run and cutting our losses short. Right? Because for a trend following system, we will continue to let our profits run as long as the trend remains in an uptrend. And the moment that our trend following system indicates to us that the uptrend is reversing into a downtrend, that is also the time when we want to take our profits or cut our losses short. And that is why Gary Bielfeldt believes that the best thing when we are starting out in the stock market is to learn how a trend following system works. For a trend following system to work, Gary Bielfeldt believes that the system has to be a medium or longer term system. Because in the short term, there's a lot of volatility in prices. And if we use a trend following system in the short term, there is likely to be a lot of whipsaws. For his trend following system, Gary Bielfeldt leans primarily on fundamental analysis. But with that said, he mentions that it is very difficult to know all the fundamentals. He believes that if we can know about 80% of the fundamentals, it is already quite a good achievement. And that is when the trend following system comes in. He uses the trend following system on when to get out of a position. Because in certain positions, Gary Bielfeldt might not know all the fundamentals. So if he relied solely on the fundamentals and some fundamentals changed that he's not aware of, he might lose money on his positions. But with a trend following system, his trend following system will help him get out of a position when the trend changes. The 4th Market Wizards lesson from Gary Bielfeldt is emotions and trading. When it comes to emotions and trading, Gary Bielfeldt mentions that when you have a loss, you should be able to handle it without any problem. And to do that, you have to keep your losses small and minimal. If you don't keep your losses small and minimal, when you take a loss, that loss can be very destabilizing. Right, so when we have a loss, on top of being able to handle it without any problem, we also have to be able to take on the next trade without letting it get to us emotionally. Because if we let our losses affect us emotionally, when we are taking on the next trade, it might affect our decision-making process. And when it affects our decision-making process, it might cause us to be too fearful to put on the next trade, and for others, it might cause them to be too aggressive in taking the next trade to revenge trade. And whether you belong to the first camp or the second camp, the outcome is that it will still affect our trading. So the main point about this lesson is to keep your losses small and minimal. In that way, it won't affect your emotions. The 5th Market Wizard lesson from Gary Bielfeldt is his advice for beginning traders. He warns this to trader: don't ever get too far behind because it is very difficult to fight back. And let's take a look at this table over here. On the left is the percentage loss that you suffer, and on the right is the amount of returns that you need to make back to break even. So for a 5% loss, to break even you need 5.26%. 10% you need 11.11%. 20% you need 25% to break even. 30% 42.86%. 40% you need 66.67%. 50% you need 100%. And it goes all the way down to 90%. For a 90% percentage loss, you need to make back 900% to break even. So can you see a trend over here? The greater your percentage loss, the more exponential the returns that you need to make back to break even. And I think the best example to illustrate this point of not getting too far behind is using the 50% loss. So say you start with $1,000 in the stock market. If you suffer a 50% percentage loss to your capital, you are left with $500. So if you suffer a 50% percentage loss to your capital, you need to make back 100% or 2x your remaining amount of money. And it's not easy to achieve 100% returns in the stock market. That is why we always want to keep our losses and our percentage loss as minimal as possible, so that it's easier for us to recoup our losses. So Gary Bielfeldt mentions that we don't want to take risks that are too large at the beginning, and we always want to be more selective when it comes to taking risks. And the way to do that is play the good hands and drop out of the poor hands. He wants us to raise and play when the percentages are skewed in our favor. So if the odds are in our favor when we are trading in the stock market, that is when we want to enter our positions and even raise our stakes in those positions. But on the other hand, if the odds are not in our favor, we want to stay out of those positions, or even if we have to stay in those positions, we want to reduce our positions. And those are the 5 market research lessons from Gary Bielfeldt. Smash that like button if you have found this video useful, and if you are new to this channel and haven't already subscribed, make sure you subscribe to this channel because each week I release new videos about the stock market, investing and trading. I'll see you in those other videos to your financial success.